me? So I'm Alex Moskov. I'm the founder and editor-in-chief of CoinCentral. We've been writing about crypto since 2016. I'm a casual CeFi enjoyer, occasional DeFi degen, and I'm perhaps best known for having an NFT of a cat. So we've got an awesome panel. We've just got 30 minutes together, and I want to really run through just the nitty-gritty stuff about where CeFi and DeFi are at in 2021. We've got an awesome panel here. I'm just going to let you guys introduce yourselves.
My name's Alejandro. I go by Alejo. I've been in Bitcoin crypto since 2014. Worked at IBM Blockchain, leading their performance marketing team. Then was at growth marketing at BlockFi. Now I'm leading growth at a small cryptocurrency project that's essentially connecting permissionless crypto over to DM Meta's blockchain, so that we can have a bridge between permissionless crypto and permission blockchain.
Good afternoon. My name is Bill Barhydt. I'm the founder and CEO of Abra. For those of you who don't know Abra, we're a crypto banking platform. Allows you to trade 100 cryptocurrencies. We have a high yield product called Abra Earn, where you can earn 9 to 14% on dollars and about 8% on Bitcoin and Ethereum. And we have a borrow product called Abra Borrow that will let you borrow against your crypto holdings, buying a house, paying school loans, whatever. We have about 2 million customers now in about 100 countries, and they're growing very fast. We manage about $2 billion assets under management, which has been doubling about every 6 months or so. And we're just past, I think, 150 so employees. So great to be here.
Hey everyone, good afternoon. My name is Nathan Bekerman. My friends call me Nate. I run strategy and partnerships at Cross River Bank. We bank a lot of crypto exchanges that most of you guys here are using. And we are building the rails for the future of crypto to bring the next billion users into crypto. So happy to be here to share some chats.
Awesome, thank you. Give it up for our panel. Over the last decade, DeFi will eat the traditional finance world in the next. I'd love to get Bill's perspective. Over the last decade, how have you seen the cryptocurrency ecosystem change as an entrepreneur in the space, as well as someone who's been active in the DeFi space as well?
Yeah, so I think that what Bitcoin showed us was that independent of scalability, you could have a decentralized money that was infinitely better than anything that any centralized entity could do. Okay, but that's money, it's not banking. And so what Ethereum has showed us is that we can start to replace components of the traditional banking world with software. So when Mark Andreessen said software is eating the world, it was mostly true with the exception of money, banking, maybe certain parts of other highly regulated systems. And so this is the first time that we're actually seeing that statement come true for money and banking. Turns out the only way to make that statement true was to disintermediate the people that were in the way in the first place. Not because they're, bad intention, it's just because they're in the way and they don't know how to get out of the way. And so, or in the case of people with their finger on the print button, they're not going to take their finger off the print button. And so part one was what's the better money? Part two is what's the better banking? Now, I still think we're in a place where DeFi is a tool, right? And we use that tool with people to generate yield in the same way that TCP/IP is a tool used by other software products. DeFi protocols will be tools used by other software products, and we're super early. It's not something that the average consumer can just go use, but our company can use. And so over time, more and more aspects of the traditional fintech kind of ecosystem are gonna find myriad aspects of their functionality replaced by decentralized systems, for sure.
Awesome. in that same vein, Nathan, I'd love to get your opinion on what would be the lowest hanging fruit right now for the for banks such as Cross River to start innovating. What are the products that you guys are really excited to build?
So the way we think about crypto is, I mean, we started banking Coinbase back in 2014 when no one else wanted to bank them, and so anyone who's sending an ACH or a wire transfer to Coinbase actually gets a little pop up with a ABA and routing number from Cross River. So our killer app right now is fiat to crypto on ramps. We're helping exchanges, fintechs, and traditional financial institutions onboard users onto crypto. We're looking very strategically at a few other products as well, including custody, trading, staking, and in the very short-term warehouse lending, so crypto-backed loans. There's huge amounts of demand that's still on the sideline that haven't been able to get access to crypto. So we want to help the businesses that are being built on the rails and give them access to the Fed rails and ACHs and wires and stuff like that.
Awesome. And another idea that is constantly kind of the definition is pushed back and forth in crypto and DeFi is how possible is it for something to be completely decentralized, right? Like even if you're in an ecosystem where you're relying on, let's say, stable coins, those stable coins are still pegged to the US dollar, which is in its essence, it's a centralized entity. So Alejo, I'd love to get your perspective as someone who's building in the Polkadot ecosystem, who's been in the DeFi space for a while.
Yeah, I don't think that centralized entities will ever go away. I still think we need some level of regulation that helps ensure that things are, for example, pegged to the US dollar. The USDC, USDT is a good example because these are held by cash or cash equivalents like bonds in real banks. So you are trusting that that US dollar is somewhere in a real place, right? It is possible maybe by pegging, and there are new protocols that are what is called rebasing, so buying or selling bonds on the open market to maintain a stable price. So I think we could potentially get there, but I do think that corporations like Abra, like even the U.S. government do add a lot of value in making things easier for most users. Most people are not as sophisticated to go in and use a lot of these protocols. A lot of these protocols are not even actually as profitable. A lot of people are actually losing money in Uniswap, SushiSwap through impermanent loss, except for a few. But as these get more sophisticated, perhaps in the future we could trend to. But I think in the short and middle term, we still need centralized entities in order to use these products.
Absolutely, and the whole premise of the discussion, the battle of CeFi versus DeFi, kind of implies that there's some zero-sum game going on between the DeFi and the CeFi ecosystem, which isn't necessarily the case. Bill, I'd love to get your perspective. Could you talk a little bit about Abra's product and how you guys are incorporating DeFi on the back end and allowing your users to interface with that ecosystem?
Sure. So Abra Earn is our yield-generating service today. Download Abra from App Store or Play Store. You can deposit dollars, like I said, earn 9% paid in dollars with an extra 5% paid in the rewards token. Deposit Bitcoin, Ethereum, Stellar, and a couple of others, and you get in-kind interest of around 3% plus 5% paid in the rewards token. Where is that yield coming from? So with the dollar product and the Bitcoin, Ethereum products, basically it's a combination of traditional collateralized lending, which looks a lot like a prime broker, meaning you're holding all of my stock, my Apple shares, my Microsoft shares. I want to buy a house. I borrow against the shares. The price of the shares moves against me. I either have to give them more collateral, more shares, or they sell the shares to put me in compliance with the loan. In the traditional crypto lending world, that's exactly what we're doing. Okay, you basically have a loan of a certain amount. If the collateral that you're posting in crypto moves against you, you either have to post more collateral or the crypto is liquidated to put you in compliance. So that's the majority of the lending book in a CeFi model today, which is how you earn that yield if you're using Abra Earn. However, now more and more of that yield is being supplemented with existing DeFi pools, which is, for example, if you're putting dollars in USDC or USDT or True USD, whatever, some of those dollars may be put to work in a DeFi pool, which is generating a higher yield for us than maybe what we're getting through lending dollars collateralized in Bitcoin, but it all kind of blends together. And so we have a very sophisticated team of people that are analyzing these DeFi liquidity, these DeFi pools, the smart contracts, they're reading Solidity code. This is not for the faint of heart. And our experience, and we've tested this, is that the average consumer, even reasonably technical people who do this themselves, are almost guaranteed to lose money. So what I'm basically telling you is if you go out and try to use DeFi services yourself and you're not doing what we're doing, you're almost guaranteed to lose money. I know that's not what you want to hear, but it's the truth. So what we do is we test in DeFi pools in small amounts for days and weeks at a time, often with our own money, and before we actually ramp them up, and we monitor them real time, 24/7. We're doing things that the average investor simply can't do, and even then, it's still a relatively small part of the overall lending book for us, but we want it to grow. But the requirements for running a DeFi-based portion of the lending book are significantly more complex than just the straight up collateralized lending that's the bread and butter of the business. And so, we will ramp it over the coming months, and we're really excited about it. But there's a misconception that, I go to this website and I see that if I put money in this Aave, curve pool, I'm going to make, 45% return on my money. It's pure bullshit, right? Not only are you not going to make that return, if you actually don't know what you're doing and don't know what the exit strategy is, you can actually lose every ounce of the return. Plus, a lot of the return is based upon the altcoin that they're paying you in the first place, which is highly volatile. So if that coin falls 80% in value, most of your interest is gone. Not to mention the principal being at risk for hacks. And so there's a lot going on in DeFi that we're super excited about, but you shouldn't just go in blindly because you see an interest rate on a screen. We use it as a tool to blend a better rate with everything that we're doing in the CeFi world. And that's what we're committed to doing, indefinitely. Now, we may expose DeFi separately at some point soon. It's something that we're playing with, but that's going to carry its own risks. It'll be separate from Abra Earn. We would never do that as part of Abra Earn because we manage that actively together with our banking partners to give the safest possible yield. We have a lot of demand from people who still want to try DeFi directly, and we may do it, but they're going to be absorbing 100% of that risk of loss when they do that.
Yeah, I'd love to dig a little bit deeper into that. The DeFi ecosystem for someone who's just jumping into it is pretty confusing, right? You have to download a Chrome extension wallet, you have to buy Ethereum somewhere, or whatever you're sending, whatever DeFi ecosystem you're interacting with, you send it over to the wallet, then you throw it into a liquidity pool with another token.
So I'll tell you, we did a demo, we had a board meeting a couple of weeks ago, and these are really old school banker VC types. And we did a demo where we basically laid out every single step that a retail investor would have to do from scratch, meaning first time, getting MetaMask working, getting my Ethereum, which, and by the way, let's make pretend it's a Sunday. You're already done. In most places, no chance, because it's a Sunday, right? Unless you want to pay 10% for your Ethereum with a credit card, right? So it can't be a weekend, first of all. But let's say it's Monday, right? So first I've got to get MetaMask working. I've got to get, somehow my Ethereum into the wallet. I've got to figure out how to get that Chrome extension integrated with whatever website I want to do. Basically, it amounted to about 23 steps before I was actually doing a DeFi transaction, when you actually lay it out. And so what we've been working on is, can we still give people access to DeFi or NFTs, because it actually all works the same way, it's just smart contracts, in a way that completely hides the first 23 steps. And that's what's missing, really, when you think about it. And so we'll see, but that's, to me, the holy grail. If you're going to expose DeFi directly and not just leave it behind the scenes, which is what we've been doing up till now.
Most people are still going through Coinbase or Kraken, or Abra, which is still a centralized company, to get to DeFi, right? No, unless you're going through local Bitcoins and actually getting Bitcoin from someone directly. So I think you guys being the on-ramp to DeFi directly is a really good move.
Yeah, there's an open source project right now. I forget the guy's name. It's really interesting. It's basically trying to port MetaMask to as an iOS extension for Safari, and I've been playing with it. And for the first time, I was actually able to buy an NFT via Safari on an iPhone with no central wallet at all. But getting it to work was the same 23 steps. It was just now on a 3-inch screen as opposed to a 27-inch screen with a keyboard.
That'll be a good day when that's gone, but maybe 5-10 years.
I think, buying Bitcoin back in 2011, 2012 wasn't as user-friendly as an experience as it is now, So I'm thinking, and Nathan, I'd love to get your experience as a banker turned DeFi degen. How do you see this evolving for, a cohort of customer that's financially savvy, and there might be many in the audience that are, very well equipped to manage their own money, but just haven't taken that leap into DeFi for a lot of the complications that Bill has described?
Yeah, I think one of the great examples of this actually for Bitcoin is if you look at El Salvador making Bitcoin, legal tender, and it took only a month for them to have more Bitcoin wallets than bank accounts in the country. And so the fact that it's actually easier now to set up a Bitcoin wallet or own some crypto than open a bank account says a lot about the future of the ecosystem. Looking specifically at DeFi, I mean, Bill is right that most consumers are not ready to interact with the world. They probably don't even know what the risks are. They don't understand smart contract risk. They don't understand, impermanent loss. So there needs to be some education there. But, the truth from Cross River's perspective, what we're really trying to do is to enable, and clearly there's a big differentiator in what interest rates are in, the US dollar and what interest rates are in USDC. And the fact that there's a huge differentiation there means there's, large demand in DeFi for dollars and not enough supply for it. And so we're trying to bridge that gap. And I'm a big believer that, the early adopters are the ones that are going to be able to build on top of that ecosystem. And so back to your earlier point about decentralization, I think people overvalue decentralization as a term. I don't think it's that important. I think decentralization, and this may be unpopular opinion, but decentralization matters to a certain extent. It's not the end-all, be-all. Solana, as an example, as an ecosystem, is super fast, super cheap, great UI, not as decentralized as Ethereum, but still works very well. And for the regular user, the benefits outweigh the risks of the lack of decentralization.
Awesome, thank you, Nathan. So Facebook had roughly 2.91 billion monthly active users as of Q3 2021. And they've been working on a stablecoin Diem that they're expected to launch, I believe, sometime.
No, it's gone. There's no more Diem. So they launched Navi, which is their new wallet, which is based upon the Pax dollar. Pax, I think it's called USDP. And they simply use that to enable Western Union-like, or more like Venmo-like transfers, but outside the US. And they're launching rails in different countries to facilitate money in and out, to basically give you a better cross-border Venmo-like experience. So for now, publicly, the plans have been shelved for a stablecoin.
Gotcha. I'd like to get Alejo's opinion on it as well. This will be an interesting discussion.
Yeah, so our whole value prop is on Diem eventually launching. I do think that they have, to your point, decentralization comes at a cost. If you're able to centralize a lot of the functions like validators, like Solana is a good example, you're able to offer this at a really great UI at a low cost. Their goal is to have a stablecoin. Unfortunately, because they are so large, a lot of different governments, for example, see this as a risk, and probably real risk, that if you do have a basket of goods that's currencies from all over the world, that if any of these bonds that are backing the stablecoin that's a basket of goods do default, that it could potentially crash an economy. So they did scale back. Now they're looking to essentially offer almost like a white label CBDC to countries that don't have that, but still offering within local countries still a stable coin that's backed by either cash or cash equivalents like bonds. Silvergate Bank is their partner. They announced that partnership not too long ago, so likely that would be their custodian. And once we do have more regulation around stablecoins in the U.S., likely they'll be able to launch. But still, yeah, to your point, they did launch Novi with another stablecoin, so this means that they're open to other protocols outside of their own. But I think probably smart for them to also have their own, that they don't have to pay $30 fees when using Ethereum as an example.
Yeah, I think, look, Facebook is a great example of, it's kind of like a private company version of what was so exciting about Bitcoin in the first place, right? What was exciting about Bitcoin, I was working in the money transfer space when Bitcoin came along. I was running a nonprofit here in Little Haiti in Miami, which was helping people send money back home to Haiti after the earthquake. And I was running into 10 million problems trying to get this going with government, regulators, just, it was horrible, right? Just trying to help people send money home. And so Bitcoin comes along and it eliminates a significant percentage of the problems I was dealing with because most of the middlemen were gone. The people that were trying to basically put the problems in my way, or it seemed like it at least, were gone. And, Facebook as kind of a big player in the space, almost like a little government, right? That has to deal with other big governments, is basically trying to create their own economy. And what we're finding is that DeFi systems are doing it better, faster, and cheaper, and at an accelerated pace. So I think their big advantage today, the only reason anybody cares at all about Diem and Navi is because they have 2 billion Instagram and Facebook users. Otherwise, no one give a shit. And the reality is that just like any other big company now, when it comes to this stuff, they're not going to be able to get out of their way as fast as a small group of developers can develop the next big thing in DeFi, which is what's happening now. And then I think what's going to happen, what's more likely to happen, is you're going to see Facebook and other companies take advantage of DeFi systems to solve the problems that the governments weren't going to let them try to solve in the first place, which is what got me out of the traditional money transfer into Bitcoin in the first place, right?
I would say it still costs like $30, $40 to send an Ethereum transaction. And
100%, but that's a technology problem. I'm talking about something different, right? So 100% that, there's a whole bunch of things that are going to happen from a software perspective to deal with all of the costs of decentralization, 100%. But that's software and it's going to happen, right? We all know that. And so the question is, what role will those monolithic centralized entities have in taking advantage of those protocols to solve consumer-facing problems? I don't know. We'll see. It's possible that even Abra doesn't need to exist in 10 years because everything we've done can be done in a decentralized way, and we simply spin out Abra to be a DAO that we all own via some token. I have no idea. It's possible. Would certainly be a hell of a lot easier than my day job right now, for sure. But right now, it's not possible.
Awesome. Yeah. Thank you, Bill. So to steer things away from software for a bit, which as much as I love software, I'd love to get into the consumer implications of DeFi and CeFi. So we printed something like 40% of all US dollars this year. How do you see people, everyday people, everyone here, everyone in the audience, using anything in DeFi or CeFi to combat inflation? And of course, this isn't financial advice, more so a theoretical discussion on how do you combat something that is becoming more and more of a threat every day. I'd like to start off with, let's kick it off with Bill. Bill also gave the first TED Talk in 2012, right, on Bitcoin. So if you were to give that TED Talk again today, do you know what we'd be pointing at?
So the premise of the talk, and this is 9 years ago, was literally, is the time right for a replacement to the Fed? And literally 9 years ago, and honestly, it was because I couldn't figure out a better way to explain Bitcoin, because now it's relatively easy to explain the basics of Bitcoin. 9 years ago, it was not easy. And so the best I could come up with at the time was, is it time for a replacement to the Federal Reserve? Well, I think we know the answer. The bottom line, though, is the Fed's not going away. The dollar's not going away. I think that will be the transactional currency for ephemeral transactions, and Bitcoin represents the single best savings technology we've ever had. I look at it kind of the opposite of most people. I don't think Bitcoin is volatile. I think it's in a discovery mode of people realizing that the dollar is basically going to zero, in a logarithmic curve. And that makes its perceived value versus the dollar volatile. But in and of itself, it's simply the best savings technology we've ever had. And, I think that you'll probably end up with a model at first where it's the dollar, the yen, the euro, RMB competing. All the other currencies go to zero. That means that the world powers become highly concentrated unless we have a savings technology that somehow mitigates that power base, because other countries won't be able to compete because they won't be able to print money. So I think that's what's going to happen. To the stats you read, and I've been tweeting about this. I tweet almost daily now. I'm sorry, but how do I say this nicely? The inflation numbers, the money printing numbers, particularly the inflation numbers, pure unadulterated BS. I mean, it's simply made up. The Fed, the White House, Congress, ignorance is not an excuse for the malfeasance and lying that's going on. Real inflation in CPI versus dollar printing terms is in the U.S., it depends upon where you are in the socioeconomic spectrum. The wealthier you are, the higher the inflation rate. But it's probably blended on the order of 13% to 14% right now. And anybody here who buys anything knows that the rates that they're quoting are just bullshit. And Powell came out today, and I tweeted this 6 months ago when they started using this word transitory. I said, transitory. There's nothing transitory about this. The only thing that's transitory is your understanding of the fact that this is not transitory. And so today they dropped the word transitory. Why? Because he said the inflationary pressures are real, perpetual, and sustainable. Duh. Everybody else knew this a year ago, right? The honest truth is they knew it, but they are highly incentivized to not admit it because of the implications of that on the broader economy. That's the problem.
There's an index called the misery index. I don't know if anyone here has heard about it. It's the unemployment rate plus the inflation rate. It's never been this high. The last time it was this high is in 1970, the Great Depression. Yeah,
and there was a word that I tweeted back in February, and I got more DMs on this from people under 30 than anything I've ever tweeted, which was, is that a typo when you wrote stagflation? What is stagflation? And I said, look, it's rearing its head again. I don't remember it. I wasn't old enough to know exactly what it meant, but I vaguely remember my parents waiting on lines for gasoline when the oil embargo happened. And so we ended up, for different reasons, with the same stagflation model that we're heading towards now. And it's only being offset by tech companies that are basically improving the productivity rate. If God bless the tech companies that are basically saving everyone else right now, right? And so that is, but the problem with that is it's creating a mismatch between the haves and have-nots, right? And so it's masking the underlying structural problems that we have that the Fed is actually making worse long term.
The other thing that's worth noting is it's not just the Fed and the U.S. government. It's every single modern, first world country that's just printing money nonstop. Japan just announced, I think it was 40% of their GDP stimulus round. And, they're smaller in comparison, but everyone's doing the same thing. In Europe, a couple of years ago, the famous quote, by any means necessary, they're just printing money to prop up the economy. And that eventually will come back in a symptom. And so, to Bill's point, Bitcoin and crypto is the single most important technological innovation of our time. and it's a financial instrument for people to combat. I mean, there's not a coincidence that Bitcoin came out in 2008 after the financial crisis, after the beginning of all this. This is, we're towards the beginning of the end right now.
So this might be a bit controversial. Definitely a Bitcoin bull. I do hold a lot of Bitcoin. I don't agree with governments printing tons of money, but inflation is good for the economy. We do want velocity in the money supply so that people are able to spend goods and the money doesn't get hoarded at the top, right? 21 million, there's only 21 million Bitcoin. What happens if all of us that have them stop hoarding them 10 generations from now, right? My kids' kids will have Bitcoin, but new people won't have Bitcoin. I think a new algorithm, which would be easy to do, it's just 2% inflation. Milton Friedman says this, okay, we can test it, we can see what's best for the economy. But yes, as a hedge to inflation, Bitcoin definitely the best thing. Deflationary, 21 million, no more will be printed. You don't want 14, 15% inflation, but some degree of inflation is good. Let's not forget 1929 happened. Great Depression, a lot of people started hoarding their cash when it was backed by gold. And then nobody actually had money to go out and buy stuff with.
So, a couple of things. One, Hayek actually wrote about this in the 70s before Bitcoin. He actually explained what would happen if you introduced private money. And it's unbelievable. I mean, he wrote a playbook that we have been playing, I mean, almost to the letter, right? He described exactly what would happen. It's happening now. The deflationary asset would be hoarded, which is what you're implying in your comment. Gets to a certain level, you have no choice but to spend it because you need to live, right? And it'll get to a certain level, and that's what will happen. I don't know what to say about the other stuff. What happened in the 20s in terms of monetary inflation was simply a response to the bad policies that led up to that in the first place. So what you're talking about is having the ability to fix all of the bad policies with potentially good policies. But if you didn't put the government in a position to have those bad policies in the first place, you wouldn't need the inflation you're talking about. So if you had a sound monetary system where no one was allowed to have their finger on the print button and everyone knew it in advance, all the BS that was happening wouldn't be happening by definition, right? So I don't think that giving governments a fixed rate of inflation is the answer. I think the answer is, and by the way, whether it's 1% inflation or truly deflationary, it doesn't really matter. The answer is going to work the same way. And that is, everybody knows that you have a savings technology that allows you to store productivity, but if it's a fixed money supply, you have to spend it because we all have to live, right? And so that's what people miss in the existing system. The reality is that money loses 90% of its value every 100 years. The only reason there's not riots in the street is because we're all dead. But if people start living to be 125, 150, look out. They're not going to accept the fact that their savings technology, right, which is based upon dead trees, is going to zero in front of their eyes.
Thanks, Bill. And unfortunately, we're coming up on time here, so can we just take a minute or two each and just, what are you looking forward to in the ecosystem in the next year or so, and how can people connect with you and your project?
Yeah, I'm looking forward to CeFi and DeFi actually coming together and making it way more accessible. Really good what you guys are doing, making the products behind the scenes more accessible, but really a good user experience for individuals to come in. You can find me on Twitter. Our company's name is Pontem Network.
I mean, I'm really excited about the regulatory clarity that should be coming in the next 12 to 18 months. I'm hopeful about that. I remember in 2017, people were always like, the institutions are coming, and they never really came. So I am hopeful that the real institutional money is going to start flowing into, crypto and Bitcoin, and that will, give the ecosystem a lot more legitimacy. And, I think there's tons of opportunities for individuals, like the opportunity to learn and get trained. And so, I'm excited about that as well.
I think I'm really excited about two things right now. One, up until now, the vast majority of our customers have been, us here at Abra. We've got a lot of US customers, European customers. In the last few months, we've seen massive influx from India, Pakistan, even Bangladesh, Korea, Philippines, Central America, parts of South America. So that is incredibly exciting to me. And actually doing very significant transaction volume, investing in crypto, earning yield. And obviously it's in smaller amounts compared to a lot of our wealthy customers in the US, but I love it. And the second thing is, I think, and we're working on this and others as well, you're going to see a lot of now payment products that take advantage of crypto in the background. And so that's something that I'm spending a lot of time on, is how do we actually take the Abra earn product and let you borrow against what you're holding and use it in real time at the point of sale, just like you're borrowing effectively against your bank account when you have a credit card. And so that's the kind of stuff that I'm working on now, because I think that ultimately, as people get their next generation kind of credit, in a lot of countries, there is no credit infrastructure, so it needs to be based upon the value of what you're holding, and the value of that crypto is actually going to be the basis for credit in the future. And that's something I'm spending a lot of time on right now.
Awesome. Well, thank you three so much for your time and sharing your insights with the audience. And the audience, you guys have been awesome. So give it up for yourselves and
Thanks, guys.
everybody here. Thank you.